MGM controls a huge slice of the Strip with big names like the Bellagio, Mandalay Bay, Luxor, and MGM Grand. But lately, the company's been under fire for constant price hikes, resort fees, parking, even small changes like ATM fees. Price gouging at hotel minibars is nothing new, but how high is too high? Aria drew criticism online after a blog post about a $26 water bottle in its minibar, but not everyone who saw the post thought the outrage was deserved. Review Journal Business reporter Emerson Drews shares some of the backlash. Others have criticized the poster, saying that they should just go to a convenience store or gas station to get their water bottle for much cheaper or just use the tap. MGM Resorts International, which operates Aria, did not immediately respond to a request for comment. Through 2024 and into 2025, these increases have fed a growing perception that MGM has become greedy. And this comes at a time when Vegas tourism itself is slowing down, which raises serious questions about how sustainable the strategy really is. Critics often compare MGM's approach to budget airlines. They lure you in with low base prices, then pile on hidden fees until the total cost looks nothing like the deal you thought you were getting. MGM has steadily raised prices across nearly all its Las Vegas properties, fueling the corporate greed narrative. These hikes hit everything from resort fees to parking and even ATM withdrawals. And most of the time, they come with little warning, sometimes multiple times in a single year. In late 2024, MGM raised resort fees across all its Strip hotels for the second time that year. Starting December 4th, those daily fees jumped again. At places like Bellagio or Aria, you're now looking at over $50 a night just in resort fees on top of your room rate. That's for amenities like Wi-Fi and gym access, whether you use them or not. Parking costs follow the same trend. Self-parking is now $20 during the week and $25 on weekends. Hotel guests pay a flat rate of $20 per day, and valet parking is up to $40 a day, plus another $40 for each extra day if you overstay 24 hours. Even ATM fees have crept up. MGM admitted these price adjustments were part of a larger revenue optimization strategy meant to offset operating costs. But here's the catch. In a city built on competition, these added costs risk driving away mid-market travelers who used to see Vegas as an affordable getaway. Traveler forums and online reviews show growing frustration. Many visitors are cutting their stays shorter or skipping MGM resorts entirely in favor of cheaper off-strip hotels. Even with all the price increases, MGM's financial results in 2025 have been mixed. As of October 29th, the company released its Q3 earnings. Consolidated net revenue came in at about $4.3 billion, up 2% year over year, but that top-line growth hit some pretty important cracks. The company posted a net loss of $285 million, or about $15 per share, compared with profit of 61 cents per share in the prior year quarter. Breaking it down further, the Las Vegas Strip Resort segment saw revenue drop about 7% to roughly $2 billion, and segment adjusted EBITDA declined about 18% year over year. On the bright side, their joint venture bet, MGM, remains strong. MGM stock has remained relatively steady for now, and some analysts still argue it's undervalued, but the biggest issue is how heavily the company depends on Las Vegas. And this quarter's data suggests the Strip business is under pressure. The drop in Las Vegas segment revenue is a reminder that higher room rates and food and beverage prices aren't enough alone to satisfy demand worries. The bottom line is that MGM has still had growth, but the core resort profits are becoming more fragile than they look. The higher prices are only a temporary fix to their bigger problem. In September, MGM joined the citywide Fabulous 5-Day Sale, a massive promotion aimed at reviving Vegas tourism. Running from September 22nd to 26th, it featured deep discounts, up to 50% off rooms, waived resort fees, free parking, and daily food and beverage credits. MGM Rewards members got up to 35% off rooms at select resorts, plus $100 in daily food and beverage credits at properties like Bellagio and the Cosmopolitan. Across MGM's 13 Strip hotels, deals started as low as $24 per night, plus fees, though some were waived. The campaign was heavily promoted online and did help fill more rooms, but only temporarily. Many saw it as a desperate correction after years of relentless price hikes. Reviews were mixed. Some guests loved the discounts, while others noticed the fine print. Extra charges for things like early check-in or late checkout. In short, it worked as a short-term fix, but it didn't change the underlying issue of overpricing. Tourism in Las Vegas has taken a noticeable hit in 2025, and MGM's properties have felt it. Visitor numbers were down 11.3% in June compared to 2024, and overall arrivals for the year are down more than 11%. Hotel occupancy has fallen by about 6%, and average daily room rates on the Strip dropped 5.1%, now sitting around $193. MGM CEO publicly acknowledged the slump, noting 7 straight months of visitation declines, including a 12% drop in July alone. Mid-tier resorts like Excalibur and Luxor have been hit the hardest, with fewer younger travelers booking stays. Layoffs and reduced employee hours have followed, adding to the strain on the local job market. Even high-end properties like Bellagio have seen quieter floors. Fewer flights into Harry Reid International Airport and competition from other destinations have played a role in this. So, while MGM continues to generate revenue, its Las Vegas division is clearly under pressure and relying more on discounts and cost-cutting than growth. If MGM wants to stay relevant, it needs to shift focus towards locals like myself and budget travelers. There are over 2 million residents in Clark County, and we represent a consistent customer base that's less vulnerable to national economic swings. MGM could attract us through real local discounts on dining, entertainment, and gaming, especially during slower midweek periods. For budget travelers, transparency is key. Instead of hiding behind endless fees, MGM could offer simpler all-inclusive pricing or value tiers, affordable rooms with basic amenities with premium options for those who want upgrades. Partnering with budget airlines or off-strip attractions can help reach price-sensitive visitors. Younger travelers, especially Gen Z and millennials, are skipping Vegas altogether for cheaper cities. Marketing focused on deals and experiences, not just luxury, could win these people back. By easing up on constant fee increases and rebuilding trust, MGM could regain loyalty and fill its rooms without depending on heavy discounts or last-minute sales. MGM's current pricing strategy might bring in short-term cash, but it's hurting its image and potentially its long-term success. The 2025 tourism slump exposed how fragile that charge more approach really is. And yes, MGM's diversification like BetMGM keeps profit stable for now, but true recovery will require rebuilding goodwill through fair pricing, smarter marketing, and a stronger connection with locals and budget travelers. If the company keeps chasing revenue at all costs, it risks alienating the very people who make Vegas what it is, a city built on fun, accessibility, and excitement. Thanks for watching. Subscribe for more breakdowns like this, and I'll see you next.